Nifty is back above 24,000. Sensex is rising, and suddenly the mood in the Indian stock market looks much more positive. But here's the important part. This rally is not happening only because investors are excited about stocks. It is being driven by two bigger forces: falling crude oil prices and the US Federal Reserve decision. And both of these can directly affect India's inflation, rupee, foreign money flows, and market sentiment. As of June 17, 2026, Indian markets were trading higher, with Nifty holding above the 24,000 level, and Sensex also in the green. Business Standard reported that around 12:30 p.m., Nifty 50 was trading near 24,045, while Sensex was around 77,018. Economic Times also reported that Dalal Street extended gains for the fourth straight session, supported by improving global sentiment. So the headline is simple: Indian markets are rising. But the real question is, why? The first big reason is crude oil. Crude oil prices have fallen below $80 per barrel, near a 3-month low, according to Economic Times. That matters a lot for India because India imports most of its crude oil. When oil prices rise, India pays more for imports. That can put pressure on the rupee, increase inflation worries, and hurt market sentiment. But when oil prices fall, the opposite can happen. Lower oil can reduce pressure on India's import bill. It can help inflation expectations. It can support the rupee. And it gives investors more confidence that India's macro situation is improving. That is why the stock market often reacts positively when crude oil falls sharply. Now, why is oil falling? Markets are reacting to optimism around a possible US-Iran agreement and easing geopolitical tensions. The idea is that if tensions cool down and supply risks reduce, oil markets may stop pricing in a fear premium. There is also discussion around the Strait of Hormuz and the possibility of smoother crude supply flows. Now, this part is important. Oil markets can change very quickly. One geopolitical headline can reverse the mood, so this is not a guarantee that oil will keep falling. But for now, the market is reading lower oil as good news for India. The second big factor is the US Federal Reserve. Investors are waiting for the Fed's interest rate decision. Why should Indian investors care about the US Fed? Because US interest rates influence global money movement. When US rates stay high, global investors can prefer safer dollar assets. That can reduce money flowing into emerging markets like India. But if the Fed sounds softer or signals future rate cuts, then risk assets like equities can get support. That is why markets are not only watching whether the Fed holds rates. Is the Fed worried about inflation? Is it open to rate cuts later? Does it sound cautious or confident? That language can move global markets. For Nifty, this creates a very interesting setup. On one side, falling crude oil is a positive for India. It supports sentiment in sectors linked to consumption, financials, autos, and broader domestic growth. On the other side, the Fed decision can still create volatility. If the Fed sounds hawkish, markets may cool down. If the Fed sounds balanced or dovish, the rally could get more support. So today's market is not just about one number on the screen. It is about whether India's macro setup is improving while global liquidity remains supportive. So here's the clean takeaway. Nifty above 24,000 is important, but the reason behind the rally matters more. Indian markets are rising because crude oil has cooled, the rupee has found support, and investors are hoping global conditions become less stressful. But the Fed decision is still the next big trigger. So the market is basically asking one question today: can lower oil and better global sentiment keep this rally alive? Follow for fast, simple finance updates that explain what actually moves the market.